Running through our multiple choice questions for our corporations dealing with formation and liquidation, we've got this question asking us what type of entity was formed. And we've got a pass-through, we've got a double taxation C-Corp, we've got a general partnership, and we've got an LLC. As we go through this, you should remember the criteria and the attributes of all these different types of entities, all the way back from our business structures lesson. And this is going to be pervasive throughout the exam. In our S-Corp lessons and our partnership lessons, make sure you're always on head on a swivel with the attributes and the characteristics of different business entity types. Now we see that Dove and Eagle formed a business entity in which they're equal owners. Dove contributed cash of $100,000 and Eagle contributed land with a basis of 40 and a fair market value of 100. For its first year of operations, the entity had taxable income of $60,000 and made no distributions. Now, a couple points to consider here. No distributions. This would result in no change to the basis because there's no distributions. However, that would be something to consider because it looks like it does tell us that Eagle has a basis of 70 at the end. Distributions would reduce that. And we'll deal with the Eagle's contribution in a second. But also another thing to consider is that C corporations are pretty static. They have the least activity in terms of increasing or decreasing basis. It's really just contributions and distributions that are going to increase or decrease basis. Whereas for flow-through entities, you're going to receive parts of the income or loss, which would increase or decrease basis. At year end, it had outstanding recourse liabilities to third parties of $10,000. What type of entity was formed if we've got Eagle with a basis of 70? Now, I'm going to eliminate one right off the bat, and that is going to be the C-Corp. Because with C-Corps, like I said, it's only contributions and distributions that are going to affect your basis. And how would Eagle have a basis of 70 if there was no distributions? And it doesn't say anything about contributions. So, I mean, contributions happened when we formed the entity, but other than that, there was no change. So we're going to eliminate our C-Corp. Similarly, I'm going to eliminate, well, actually not eliminate, let's consider what's going on. We've got an LLC, which can be taxed as either a C corporation or a partnership. We know that it can't be taxed as a C Corp because, well, we eliminated a C Corp. So we are choosing between an S Corp or an LLC/partnership because the only other option besides C Corp that an LLC can be taxed as is a partnership. So it's either going to be partnership/partnership or S Corp. Now, that is going to pretty much allow us to know that it is going to be letter A as an S Corp because if we know that our two choices for LLC are C Corp or partnership, and it's not C Corp, that leaves us with partnership, and we can't have two of the same answer. We can't choose two answers. So based on process of elimination, and hopefully this is something that you take into the exam with you as well, this critical analysis and thinking about it, that is going to be super important to understand. Now, what's happening? How did we get to this 70? It looks like that Eagle contributed land with a basis of 40. With S-Corps, with taxation there, what is going to be your basis? Well, it's the basis that you gave up, so that's 40. 60,000 was taxable income. We know we are equal owners, so 50-50. Eagle gets $30,000 of the profits. 40,000 plus 30,000, that is going to bring us to a basis of 70. So for all of these reasons, we're talking it through. That is why we're choosing letter A for the S corporation. Now, dealing more with the partnerships, just to beat it to death even more, just for your understanding. In a general partnership, your partner's basis is increased by your share of the partnership liabilities. Now, in this scenario, we just did the math there. The liabilities are listed at 10,000, and we see that there's no impact there. And because there's no impact of those liabilities, it would not be a partnership. There are many different ways to approach this question. Use one, use them all, whatever it takes to get the answer. Next up, we have Carson, and Carson owned 40% of the outstanding stock of a C corporation. Good for you, Carson. During a tax year, the corporation reported $400,000 in taxable income and distributed a total of $70,000 in cash dividends to its shareholders. Carson accurately reported $28,000 in gross income on Carson's individual tax return. If the corporation had been an S-Corp, interesting, and the distributions to the owners had been proportionate, how much income would Carson have reported on Carson's individual return? Wonderful question here. Well, if we are a C-Corp, think about it. If you invest in Microsoft, if you invest in Starbucks, you invest in any public company, it doesn't matter how much the company makes or loses. Well, that might affect the share price for sure. But in terms of your basis, in terms of what you recognize, they could make a bajillion dollars, but that's not going to affect you. What will hopefully happen is they make a lot of money and they distribute that to you as the shareholder through dividends. So S corps, however, the more that the more money a corporation makes, the more it's going to benefit you because it's a flow through entity, and you as the shareholder will receive your proportion of that income or loss. Same thing with losses. So in this case, it doesn't matter tax wise in this year, again, unless it's dividends, how much they make. But if you were an S corp, now it's asking about an S corp. How would that change everything? Well, okay, so with a C corp, we ignore this, but for an S corp, we're saying 40%, and if we're an S corp, we're going to get 40% of that taxable income because we're flow through. Now, if that was 40% of a loss, we would also get 40% of that as a loss. And simply put, we're just going to have 40% of $400,000. That's going to give us our final answer of $160,000. Again, understanding the differences between S corps and C corps, the tax implications, and what do we recognize as the shareholder, it changes based on the entity type. Another couple great questions down. Hopefully you're practicing, seeing even more on your own. Please keep it up. I'm sure you're doing great. See you in the next one. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.